Good morning, good afternoon, good evening. Don't say goodnight though. We got a banger for you today. Unfortunately, I could not make it from my shift home earlier, so we're going live. We're doing it live. We're doing it live. Apologize for any background noise or customers, things like that. We've all had to make sacrifices during this bear market, am I right? And we can't just moon and stay retired forever. You know, it's to each their own. To every time there's an up and down, you know. So we're gonna hold on just one sec. Sorry, Barry. What time is Barry coming in? What time's the shift? Okay, I don't know how I'm gonna have to stay here, but anyways, we're gonna do it. We're gonna do it live. Okay, it's gonna be great. Without further ado, let's bring in the other person, the tag team on the show tonight. Orca, welcome to the show.
Oh, man, I think you just nailed the new cryptocurrency catchphrase. You can't stay retired forever. That was beautiful.
You know, it's a true statement. I think there's some leverage folks who I feel for in the market, but you know, it's you got to manage your money, right? That's what we're going to talk about today. We're going to talk about markets and everything else, bloodbath and beyond, as I've also coined today.
Nice, dude.
So. Yeah, flip the burger. Let's say hi to the chat real quick. David James, flip the burger, Barry. Yeah, well, Barry, no, so Barry's coming on shift to replace me. I think that's the ideal. But yes, when he gets, he'll be flipping something. DX can best beer in the business. That I think that's true. That's a fact. Pretty sure he's talking about you on that one. That is a fact. It's
amazing what you can accomplish if you just remain unkempt long enough.
If you just stop and see what happens. Yes, yes, I like the experiment.
Nature reclaims the territory.
It's like, if you never cut down a forest, it just keeps growing. So there you go. Mm-hmm. I like it. MCA in the house, another regular. Appreciate it. T-Bird, elbow cough. Yep. That's there's a little tongue in cheek in this episode if you haven't noticed. So yeah, bear with me on that. Big Beard, Orca. Orca was on Kindness earlier, and him and Wales. So and I've seen him on quite a few streams recently. So you've been distributing the beard lately, if you will.
I guess, man. I know. I gotta tone it back a little bit. I gotta save some beard for myself.
You know, if you don't control it, it controls you. That's what they say. Got Marcavelli in the house. Appreciate everyone. You know, in all seriousness, I can't be serious this episode with McDonald's in the background, but we're gonna try to cover some good content. I know Orca is a master in all areas that he knows about, at least. I think a lot of people think highly of him, so I think we can get some good information of, like, you know, what I'd like to talk about. Like, we'll get into it too after. I want you to do a little bit of an intro. I actually want to know crypto curricula. Am I saying it correctly?
Yeah, crypto curricula. Yep.
Okay. Yeah. Can you just dive into, like, that being part of it, because I want to make sure, like, we get the name change lately, because I still call you HEX Orca. That's what I remember. But then I got to be Orca, and then I'm like, every time I try to at you, I'm like, oh, is it CI or CU? And eventually, it's on me. It's on me. I'm gonna figure it eventually. But yeah, can you just give it? Yeah, at least for me, like, how'd you get into crypto? How'd you find Richard Heart products and otherwise? And, like, you know, what was the deal with the name change, and, you know, what motivated you to do all that stuff? Oh, did I break it?
Spinning on me. Okay, I'm back.
Oh, okay, we're back.
Okay. Scary times there for a second.
Could be worse.
Yeah, I mean, the skinny on crypto curricula is trying to put together a website that allows people to not have to, like, go out and use the Google machine 1,000 different directions to get the answers to kind of the core information necessary to get your hands around crypto and, like, management of your own finances. So I had to teach myself basically everything that I know about investing, trading, crypto. There have been resources that I found useful, but it's never aggregated in one spot. And it's super frustrating because, as you know, when you go and you look for answers on the internet, you can find somebody playing the opposite side of any coin. And so typically the learning curve looks like gaining exposure to a bunch of different ideas and then having to trial and error through who's really got the good info. And that's just so frustrating to me. I think it's a huge barrier to entry for a lot of people who are ambitious enough and courageous enough to put themselves in the volatility of crypto. But if you don't really have, like, a fundamental understanding of money, banking, things like OPSEC, it's going to be a bumpy road. And that's why you probably hear so many stories of, well, I got in at this year, but I got hacked and it took me this long to get back. Or I got in on this token, but then it was a bear market. So, most people like measure crypto in cycles or ups and downs in their market. And I think that while we'll never be able to remove volatility from crypto, nor do we want to, right? A lot of people are in it for the volatility. We could do a lot better at expediting the learning curve so that people don't have to go through a 3, 4, 5-year process of picking up scars to finally feel like, oh, if I had just known this, I would finally have been dangerous in crypto. So the website is basically a free resource to help people get a fundamental understanding of money, banking, traditional finance, the role that crypto plays within the evolution of that paradigm, and along the way gives them just really easy to digest, kind of like quick hitting facts, or in some cases opinions, on what I have found to help me create a more accurate perspective on why number go up, why number go down, which numbers are going to be here next cycle, which things are probably like the 700th iteration of the same broken system. And I think that if people had that resource, they would feel a lot more confident that that's a normal journey. Like, nobody has the one website fits all answer to crypto. So that's okay. And I think if people knew that the majority of folks that have success in crypto have really just bled their way to the goal line, then they would be a little less shy about asking questions. I know that it's a highly technical industry, so like, there's nothing worse than feeling like everybody else knows what's going on and you're the odd man out. You don't really want to raise your hand and say, hey, new guy here, can you help me without me having to pay you $1,000 a month to get the answers, or without you scamming me? So just trying to provide that kind of one-stop shop for folks.
Yeah, it's you want to try to avoid getting that 10x or however much, and then be down 95% every single cycle. It's it's rough like that. And yeah, like that's a pretty good analogy. I like you kind of bringing out the alternate to a paid group, for example, having a resource available such as a website that kind of captures a lot of this stuff. Is that related to, because I looked at some of your HEX University stuff, is there a correlation there, or is that kind of a new project?
Yeah, there will be some correlation there. The crypto curricula will be crypto general. So I don't want to tunnel it into just HEX and PulseChain stuff, because there is, a much broader community of people that are interested in crypto. I would love for them to get involved in PulseChain and to see the mathematical value proposition of HEX, but I don't want it to become another echo silo tool. I would rather everyone from outside of our Hexaking community to be able to get their hands around that value, and that'll likely bring a lot of people in to the couple of assets that Richard has founded. But there's so many more people out there that are looking for good crypto info that I think it's important we aim it at the general population.
Okay, so it's is it cryptocurricula.com or
.org? Yeah, cryptocurricula.org. It's just a placeholder right now. I'm doing all the type copy, and then we have a member in the community who goes by Bullish, who's just a wizard at web design and stuff like that. So he's been very generous with his time and his skills to help me take whatever I come up with on the content side and be able to turn it into something pretty for y'all to see on the internet.
Nice. No, that's awesome, man. We definitely, the more educational resources and the more things that help with less wreckage, the better, for sure. There's a lot of people out there with a lot of questions, and they're looking for answers, and they're looking for answers from people who know what they're talking about. So that's great, man. I had no idea about the project. What made me ask the question was the name change. So that introduced a whole new concept of, okay, there's actually a crypto curriculum.
Yep, exactly.
Yeah,
and that's where, like, I had run into issues. So a lot of people know Hex Orca from the Twitter space stuff, but I ran into issues where I was trying to spread the good word, if you will, or just go talk crypto to folks in other spaces that I wasn't the host in. And some people have predispositions for or against particular cryptos, and so I was running into just a ton of flack. And I think a lot of this was kind of like we had just crossed out of the peak of the bull run, and people were finally starting to feel the not so fun side of crypto as their number go down. And so people were very combative, or at least tense. And I don't think that was helping me at all. But I found that when I changed the name, it was able to kind of slide under the radar. And then you're able to get into a conversation with somebody who otherwise was a little too quick to pull the trigger against you. And now they were more receptive, and I was able to at least bring up information in a way that I would get into a conversation and not just be like laughed off the stage before I could even like represent and chat crypto.
It's a good strategy. Yeah, I think I'm hoping in maybe a few years, my name won't give people such a interesting reaction. I think for better or for worse, I buy Richard Heart stock. Of course, and as a first principles thinker, I put this in YouTube videos, description, things like that. Him and no one else is immune to constructive criticism. I try to think objectively, and yeah, I'm not just cheerleader. I just think that, you know, his ideas, his products, all these things are worth talking about, and you know, I want to promote them and think about them and have conversations about them. But it is interesting. I do feel that there's some people who probably won't even watch my videos or won't even engage with me because RHMaximalism. Oh, I'm not a maxi. I don't want to talk. Well, if you watch the show, that's not. I'm not sitting here like there isn't like this curriculum that I'm just teaching you how to be best at Richard Heart stuff. Like that's not what's going on. I just, you know, that's
and you know, of all the public figures in crypto, I mean, he would be a good one to take the maxi side on, right? We've seen now with Celsius and Luna, and he's been one of the things that got me interested before he even had HEX on the radar was how informative he was with regard to Bitcoin. And that helps me out because I thought I knew things, and he exposed a whole new world to me because I'm not like a computer science guy. I can get my head around concepts, but I'm not coding, you know, smart contracts and stuff like that. So he did a great job of showing me what it meant to like fork blockchains and things that 5-6 years ago I just took for granted. I didn't really care about them. It was easy to be a Bitcoin maximalist because there weren't a ton of alternative options to get excited about. And the value proposition of Bitcoin sounded really good. I mean, we were all moving towards this feeling of like end the Fed and we can do it better. But when you fall into those camps, it can be so easy to put the blinders on to the negative externalities of Bitcoin. And so without his kind of live evolution of opinion from Bitcoin is clearly the only thing in crypto going on to like this Ethereum thing actually has some stuff going on. If I hadn't seen somebody that was so knowledgeable in the space do that evolution, I probably would still be in the camp that is too quick to judge the RHMaximalist profiles or, you know, this token community over here. So that to me was a big value. And now I try to expand on that, knowing he wasn't a hexagon yet, right? It didn't exist. So there is a broader community to crypto. There is a broader philosophy out there. And I think it's important to try and move as a movement of philosophy before we worry about tribalism. So it's a weird balance. Hard to get anyone to pay attention to you if you don't share something in common, right? But it's also not very useful if it's just 7 guys patting each other on the back all day. So got to strike the balance.
For sure. So we got a question here. Is it going to be another Bloody Sunday? Would you take that one?
Oh man, dude, I don't even know what day of the week it is right now. So I would just say we're in a bear market. Things are going to continue to be beary. I think oh man, I should pull it up real quick. There was a tweet that I was running some errands, so I won't take forever trying to find this, but somebody just came out. He was a checkmark on Twitter, and he was like, the bear market, or we think that the bottom is in. Yeah, his name's actually surprisingly Barry Silbert said, feels like we have hit max pain and uncertainty in the crypto market. We're buying BTC here. Rex pleb, dude. Absolutely Rex pleb. Like,
if you don't know much about Barry Silbert, I remember he was big into Ethereum Classic, and he was, you know, trying to pamp at Barry for a long time, right? I think it's the same guy.
So it's like, people don't understand typically because they haven't either been around long enough or they haven't like caught a dozen falling knives before. But there's a real value to centralized exchanges to have time pass. So like I was talking with Wales and Crypto Kindness today. Shout out Kindness. I saw him in the chat a little bit ago.
Yeah.
There's real criteria, the Kelly criterion, that tell you like it's not just about price volatility. There's also the time invested that matters. And so psychologically, people begin to believe that the longer something stays at a particular price, that's like quote unquote support or resistance. But in crypto markets, the order book depth is so thin that it really doesn't take much money at all, relatively speaking, to pump the price significantly or dump the price significantly. But what you've got is a lot of people who are trading on paper with leverage, and they have to pay incrementally over time, like every 8 hours or every 12 hours, depending on the service they use, a funding fee. And so these exchanges can actually earn money and do earn a lot of their money when the price is caught in a range for a long time. And these are ranges that they have enough liquidity to essentially enforce, because if everybody's trading on leverage and no one's actually moving the asset's price by putting on-chain transactions together with supply and demand, they can just market buy a couple of million or market sell a couple of million and liquidate your leverage on different sides of the betting board. And so when I see somebody go like, it, first of all, the tweet began with feels like. If your financial manager is telling you that he feels like things are going a particular, get the hell out of that guy's money management program. So what it feels like to me is he's impatient. Yeah, it sounds like he just thinks, well, things have been sucking for a long time. What's the probability they can keep sucking? And it's like,
let me get these last sell orders in real quick. Oh, I can play too. Cool.
Yeah, it can get way worse, and it can take a long time to get worse. And that's why like dollar cost averaging is such a successful strategy for so many people. Yeah, someone just said DCA is king. That's really what it is. Like, these are buying opportunities. So like, I'm not knocking the dude. If he wants to buy BTC at 20K, that's totally fine. Like, I don't know that it's going to go lower, but if I see somebody trying to like rally the troops, like we all need to buy now, it's like, okay, let's wait for that 20% discount that's inevitably coming behind you. So it's just weird.
Yeah. Well, I always think back to what Richard said the other day on stream about looking at the grayscale discount as an indicator as well. Like that seems like a huge way of knowing, like, you know, if somebody's going to sell you 30% off Bitcoin, they, you know, that could be a sign too. So it's, to me, that's like one of the biggest things that I've looked at too.
Yeah, I think institutions are definitely shorting through grayscale. It's also interesting when you look at how many shares exist versus the ratio of Bitcoin that are owned. And so grayscale is definitely to the benefit of institutions. You know, they can pitch it all they want as like giving exposure to the ordinary like boomer. But that's not what it's doing. It's just an opportunity for institutional investors to hedge their bets in Bitcoin investments so that they can gain exposure to the downside without having to become like Bitfinex account trading. The liquidity in TradFi is probably able to support less of a like cutthroat order book because there's just more money out there and the institutions don't necessarily have to day trade it. So it plays to the benefit of institutions at the expense of retailers who think like, I mean, just go back and look at virtually any futures ETF for Bitcoin. Like it's never been the thing that makes Bitcoin have a blow off top. So if you assume that those retail investors aren't taking short-sided bets on Bitcoin in the legacy markets, then they're just like exit liquidity for an institution that wants to hedge their bets.
Well, speaking of boomers too, you know, what do you think of the retirement of a lot of them going on and you know, it kind of has started and will continue for a while. Do you think that's going to drag out the macro bear market, like of all the markets, or how do you think that's going to affect the economy?
That'll be interesting. You know, that's enough money where there's going to be a lot of nuance and unpredictability, but I do see the wealth transfer occurring. Unfortunately, I don't see the wealth transferring from like the boomers to the younger generations. I see it transferring from boomers to the state. People are getting liquidated on their 401ks to the tune of inflation and to the tune of kind of runaway economic slowdown. where they call it like shrinkflation and stagflation. So it's like we're paying more and we're getting less. We're paying more faster for things that aren't changing in quality. So I see the wealth transfer, unfortunately, not reaching as generously into the next generation as it could, maybe because of these lack of fundamental money principles that we haven't been taught, and nobody seems to care to go out and teach themselves these days. So you trust this money manager. There's this huge misconception that money managers that handle your 401k have an incentive to like go out and beat the market. It's not true. Their only goal really is to not piss you off enough that you leave. They earn fees, they earn management fees. And if your 401k is up 15% and the S&P 500 is up 15%, they look like they did their job. If your account's up 5% and the S&P is up 15%, they weasel it away and say like, well, you know, we win some, we lose some, and it's all about the long game. But all they're trying to do is hold on to your money for as long as possible to earn the 2% or whatever they're getting, you know, a portion of a percent on decades of your business. Because if you were to open up your statement on, say, like the COVID dip, and you go, oh, that's what minus 30% looks like, you might blame that institution and then go find a competitor. So they're not in the market of making risky bets with your money. They are in the business of keeping you complacent and largely unaware of what competitive performance really looks like, because they want to have as many accounts on the book as possible with very low risk bets that allow them to just hold on and scrape fees for decades.
So their primary thing they go after is having the most capital under management possible.
Yeah, pretty much. I mean, you know, within certain risk metrics, but you'll never, it's like such an illusion. They come into your office and they show you like, hey, you can be in the conservative investments or the high risk. And if you're younger, maybe go higher. None of that stuff is going to be more than 2 or 3% off. They're overwhelmingly like super diversified, so that there's really no way to pin them down as the reason that your account's underperforming, or if it's overperforming, then they're just making better fees typically. So it's kind of like a smoke screen of value, and people just like to have the peace of mind. Maybe it's because we really haven't been taught these financial principles typically, like in the public school system. If you went to college to study music theory, you probably didn't learn a ton about money management. So there's a peace of mind aspect that takes people a long way, where it's like, you know, you could just invest in the S&P 500 and reinvest dividends, and you'd probably beat that money manager without all of the freaking fees that they're charging you. But of course, a lot of people like the 4 to 5% of free money that their employer matches. And like, that's a good deal. Free money, Richard will tell you, good money, free money is always good. So take advantage of those services to an extent, but understand that they're not trying to make you wealthy. They're just trying to make you their customer for as long as possible.
The least amount of, they're trying to make you happy, essentially happy enough to not to leave them.
Yeah. Just as long as you're complacent, then they're doing their job.
Nice. Take a look at chat real quick. HEX16, appreciate you coming, man. Good to see you. Alan's killing it with some questions, and Prosperity Project, Nintendo. Nice. J-Man, see you as well. Mark and Bailey 23. I like this comment. You're just a win maxi. That was going back to my explanation of RHMax. I like that. Nice.
Oh yeah, man.
Excited for PulseChain. Yeah, let's talk about PulseChain a little bit too. Can you just give? I think a lot of people they either need to hear this a few times and maybe different ways. I think it's just hard to wrap your head around yield farming, liquidity providing, stuff like that. Like, what are the, first, can you just give us like a introduction? Like what are those things? What are the best opportunities in PulseChain to do them? And, impermanent loss, how can you avoid that? And especially, what are the losing strategies? Like, what are the things you just should not participate in these things? That's what I think.
Dude, that's like a really good question.
Yeah.
Nobody ever asks like what's the bad strategy, because it's like, well, let me grab my notebook. Like here's 100 of them.
Oh, you got a history book. Okay.
I've caught falling knives before, man. Like if you've been in crypto long enough, you've gotten wrecked. And like not on my core position. So I have like I'll get to the PulseChain thing, but the way I approach crypto is I have a black hole bag, which is my FU to the Federal Reserve. It's like there are coins that I will put in there that there's no reason I will ever liquidate that position. I just take fiat and I light it on fire and it becomes energy in this black hole of crypto. And that's like my resist, fight the power. And so outside of that, I have speculative bags and I've caught knives. I have gone heavy. I know what a liquidation wick is. I've also been successful in leverage trading and things like that. So I know why most people should never engage in it. I also know why, if I was a 18-year-old kid and I had a full-time job and, I could afford to make a mistake and it wouldn't be the end of my life. There's a difference between making a mistake when you're 18 versus 70. You could change your life with, maybe it's luck or maybe it's a well-played strategy using those services. Like there's a time and a place for different approaches. And so I have the benefit of earning a lot of scars, but also winning quite a few battles along the way. So as for PulseChain and like liquidity farming and, liquidity pools and farming, like all of that, I think people need to understand is that when you engage in traditional finance, and maybe you haven't, so sorry if you have no experience like managing your own stocks or looking at the stock market, and now you're getting into crypto, understand when people talk about supply and demand, that just means that there's a whole lot of people that can provide something and a whole lot of people that want something, and there's no guarantee that one side has an advantage over the other. So you get volatility, you get equilibrium in the agreements of where the price is on speculative assets. With PulseChain and crypto in general, people, you and I, become the market makers. Regular human beings, as opposed to BlackRock or Vanguard, are able to take their ownership of assets and offer them for the market to exchange. So a market maker is somebody who essentially sets the price in the market because they own so many shares or so many tokens or so many coins of something that they can pair it up against another asset, call it cash, and say, if you give me this many of this thing, I'll give you this many of that thing. And traditionally in legacy finance, those are massive institutions, and sometimes it's described as like a heavy wallet hitting the table. It's like this person has FU money and they have so much money that they can't just simply go and find value for their finances by buying up shares of things anymore from the retail perspective. So they'll just accumulate magnitudes more volume and then service liquidity to people. And so in crypto, you don't necessarily have to have all the money in the world. I can't just provide liquidity on the New York Stock Exchange. There are market makers and regulations that ensure that particular institutions with collateral and balance sheets are providing that service. But in crypto, you could have relatively no money and still go out and provide liquidity and earn fees or potentially earn rewards for servicing the assets that people are interested in. So that's what liquidity providing is. It's just you becoming the market maker of traditional finance. You are saying, I've got a little bit of this and a little bit of that, and I don't know if you're going to want all of this or all of that or some mix, hopefully some mix of the two, but I have a little bit of each of them. So these people over here have asset A, these people have asset B. They just want to get in between these two assets. I can provide that service and let you dip into my bags for a fee so that you're able to service that liquidity and get the asset that you actually want on the other side. And then like yield farming is sort of the concept that if we understand that the more assets on the table makes more efficient liquidity to service order depth, so less slippage, more volume available for buyers to access and for sellers to access, then yield farming is sort of the concept that if we can get these funds not necessarily locked up, but offered to the market in such a way that when orders are routed, the fees that are scraped are earned in different assets, because a lot of people don't know, but when you do a decentralized exchange swap, we call them DEX swaps, or you might think of it as like a market buy when you go from USDC into HEX. That liquidity has to route through liquidity providers, and by having more assets provided by the greater market or the communities of liquidity providers, some of these fees are able to be scraped and stored in value in assets that you wouldn't necessarily, it's not USDC, so maybe you don't necessarily want to immediately pull that liquidity off the table. And it incentivizes people to keep their assets on the table longer so that more people have access to an efficient order book. And so the reward then is yield in the form of scraped fees, and different protocols do it in different ways. But all you're really hearing when you hear liquidity providing and yield farming is that the regular ordinary folks in the world, and some of them are millionaires and billionaires, but some of them have, you know, the night shift at McDonald's, they are providing liquidity to the market and they're just earning rewards. So they're risking something. They're risking the fact that you and I might see HEX as way more valuable than dollars. And so we throw our worthless fiat USDC at these people and we take all of their awesome HEX, and then HEX goes on to outperform the dollar for the next 5 years. And this person's holding on to all this stable coin going, well, you know, I earned fees and I have more money than I started with, but if I had just invested in the thing I was giving away, I would have outperformed this bag right here. So it's just an economic incentive for people to take that risk and to try and make them whole with regard to things like impermanent loss.
So the people who are providing on the USDC side, do they just not believe? Are they just not a believer in HEX, for example? If they can do single-sided, they're just betting that they'd rather put it in the dollar right now, maybe based on market conditions even?
Yeah, so that's a great point, right? There's a lot of nuance to that, and different people have different perspectives. Some liquidity providers are totally benign to the idea that the assets matter at all, and maybe they don't care about HEX, and so they just recognize that there's demand, there's an opportunity to earn fees. So they say, look, man, I've got enough capital, I could buy, you know, a bag of this, a bag of that, a bag of this. And so if y'all really want an efficient order book to go and buy up your precious HEX, then I'll provide. I don't care, man. I'll provide both sides of this token pair, and I'm not even focused on what that crypto does. I'm just going to earn my fees because there's enough energy and volume going into that. And that actually, without trying to go too far on a tangent, that is the logical justification for why HEX is gatekept. There's not a ton of trade volume in HEX. So like most assets, people are buying and selling. And in HEX, we're seeing a lot of selling now, but typically HEX is a buy and hold thing for people in the last couple of years. If you look at the volume from a dollar standpoint, there's tens of millions of dollars changing hands, but that's not like Bitcoin and Ethereum that are doing, you know, hundreds of millions, if not billions of dollars in volume. And so centralized exchanges don't have a financial incentive to facilitate that. They don't want to be the liquidity provider in the equation for a couple of reasons. If the volume isn't there, they don't really stand to earn much in the management fees or the service fees. But additionally, when you combine that idea with the fact that HEX is kind of built to be a strong performing financial token. There are utility tokens, there are financial tokens. The utility of HEX is finance. It's monetizing time. These centralized exchanges take on marketing dollars from projects that want to be listed. They take on marketing dollars from their buddies, their partners in business who provide leverage trading. And so if HEX is only on DEXs and there's no diverse ecosystem of leverage trading for books to be able to arbitrage opportunities and really pitch retail investors, then they don't want exposure to that, and they don't want to put it on the same website where they are wrecking people by getting them to buy into these here today, gone tomorrow projects that are willing to pay thousands, hundreds of thousands, $1 million to get listed on the website. These exchanges would rather just take free money, take marketing dollars, plus maybe a private allocation of circulating supply and whatever other dirty tricks are out there, because that pays well. And if you put a product that doesn't do those adversarial and predatory things on the same page as all these things that could get you wrecked, people are going to slowly figure out like, okay, this actually is a better option for my money. And then they're going to lose transaction fees on all of these other volatile trading pairs. So they have a real financial incentive to just not show you some of the products that are in the marketplace, because it could vampire tech their own business.
So how do we, is there a way to change that? Is that something that can be changed, or
Yeah,
is it just fundamental
for sure.
to RH products?
PulseChain will change that because layer ones, just people really don't understand the magnitude of difference in business between a layer one and a smart contract token. That's why, as much as HEX is down bad now, I like to just say down bad.
Down bad.
It's not a layer one, and so like the price performance that it has done is tremendous, because you can put it on a graph, and you've probably seen Gerardo's look into hex.com graphs. You can put it on a graph next to Ethereum and Bitcoin and go, wow, it's actually competing. But it's not a chain, y'all. It's not a layer one. It's not a payment network. It's not a smart contract machine. So there's really no reason that it's being compared to those two things, other than maybe this store of value meme that has been sort of all the rage lately. But when PulseChain comes into play, there will be so many people who want exposure because it's a layer one, and that means that the possibilities are endless. Maybe the next greatest development in crypto is deployed on this blockchain, and maybe that will necessitate a huge capital inflow to acquire the gas coin, the native coin, Pulse. And so there will be massive trade volume going into things like that, as well as all the developers that may need to buy a big bag to be able to provide the liquidity platform for their initial launch and things like that. That's where centralized exchanges will get involved. And I think it's probably, this is a huge assumption, but I think it maybe makes sense. Once you've kind of knocked down the door and you've accepted that the layer one is available for exposure on the centralized exchange, we probably have similar sentiments that PulseChain will help HEX be more attractive to retail investors, lower fees to get into your staking mechanisms and things like that. Yeah. And just in terms of transactions, that will probably be enough to kick the door down for HEX as well. And so you see the memes every now and then of like the new project, and it's in the Trojan horse, and it's like, that's how you're going to get HEX on the centralized exchange, is because this utility token is somehow going to bring the attention. It's like that. The meme is kind of true. PulseChain is probably the Trojan horse, and HEX is sitting inside of it. So as people gain exposure to PulseChain, whether or not they get HEX on the centralized exchange, they just have way more exposure to the existence of this thing, because it's not that big of a mental leap to say Richard founded both of them. And if you really like this one, have you tried this one? So I think that's probably the future of getting out of the gatekeeping. Right now, it's just not economically an incentive. It's just the money isn't there to justify risking the rest of the business. But you've also seen Coinbase getting wrecked, Crypto.com getting wrecked, tons of exchanges that are having troubles right now. Maybe they took high risk bets in the market. Maybe they're money laundering, who knows? But until there's a layer one solution, it's going to be easy for them to continue to take high risk bets on much more liquid markets like Bitcoin and Ethereum than it is to hope that by offering this one ERC20 to their market, it's going to somehow really make a dent in their P&L without risking all of this other business they're already doing.
Is that how we get fiat on-ramps? Is that one way that could happen, is the centralized exchange for, getting them for Pulse and HEX? Is that part of the gatekeeping right now? That's if that happened, if Pulse got on a centralized exchange, and then maybe HEX would be, and so on, would that open up fiat on-ramps?
For sure. I mean, if you can get, that's the beauty of DEXs, is that if you can just get us one asset, and preferably the native coin, the gas token, if you can get that on the centralized exchange, it would be easy to go to Gemini, buy up a bunch of PulseChain, move it to your MetaMask, and then just go through PulseX and swap into HEX. And so you've effectively created a fiat on-ramp to HEX, even if it's not a direct from your bank account to the exchange in the form of HEX. All you need is one asset that's tied to that layer one and has a DEX compatible to that smart contract, because the that's where DeFi does its job really well, is everything is tradable for everything else given order book thickness. So if when PulseChain launches, and we've seen it, like Bitfinex is one of the largest holders of Bitcoin, and they accumulated for years, and then they go and they launch to market because they own all of this Bitcoin that they can provide liquidity and they can provide leverage opportunities to traders because they got in so early that their cost basis is like unfathomably low. You're talking like $470 cost basis on their Bitcoin. And everyone's like, oh, we're on our way to 11K. 11K is a hell of a lot higher than $400. So they're not sweating at all. And they're earning fees and they're getting people wrecked left and right doing it. So if you can get PulseChain on one of these centralized exchanges, it'll only occur because they have accumulated enough of a bag that they feel that they can service everybody's business profitably. They don't want to be constantly tapping their liquidity, having to go out and market buy in high volatility windstorms. So they're more likely to accumulate early and on the inexpensive side of the S curve. And then when the time is right and they've matured their collateral to the point where they feel they can service whatever their targets are, $400 million in PulseChain volume a day or something like that. Once they feel they have that number in the war chest, then the gates rise and they're willing to provide that service to you.
Well, it made me think of too the PulseChain wallet. Whenever it comes out, we know, Rich talked about it a little bit. Not sure what obviously is going to happen after launch at some point. We don't know when the launch is going to happen, so it's hard to say all these things. I'm just thinking, does MetaMask? Is there a fiat on ramp through MetaMask? I think there is.
Yeah, they have, at least as far as I recall. I don't buy through MetaMask, but I know that there's like MoonPay is a pretty popular one, and then I think the other one's called like Wire, WYRE. And those are fiat on ramps in a sense. With a Richard Heart wallet, the wallet itself would not be providing that service. It would be containing the service that's able to provide it, but it would be someone like a MoonPay or some intermediary who has a money transmitter license, and they're able to facilitate fiat cash into a market buy of crypto for some service fee. I think what we would probably expect with and that's not like, it's not asking too much. If Richard puts out a wallet, those people will line up at the door to try to get involved and say, hey, can we get our DApp involved? Because that's service fees for them. And if they can get the, initial first mover advantage and stuff like that, it could be very profitable for them. MoonPay is ripping you off, but it's convenience. And I've been on the record saying that convenience and complacency are sort of the two like crutches or weaknesses that we have currently in crypto. And I get it. We all want easy money or easy service, but that's where you pay a 7.5% network fee or, service fee. And you just don't realize how much money you're handing to these middlemen. And that's the point of crypto, is to take the middlemen out of the equation. So if you're getting things done for you conveniently, like earning 7% on your Celsius collateral, there's something else going on. The convenience is the recipe for disaster in crypto. Nobody said it was going to be easy to do 6 million X. So for people to just think that they're going to swipe their debit card and become billionaires, have you really thought about why that doesn't happen for so many people? Like, there's more money to be made killing you every time you do that swipe than there is for you to buy the bottom every time you swipe it. I think that the wallet will probably provide like real utilities. Like Richard's talked about, you should be able to see like your trades, the profitability of your positions. All of that stuff should be really simple front-end DApp stuff. I would personally like to see him incorporate some security features that have been produced on other chains that have their own wallets, where you have seen probably people having their funds stolen or hacked. And so people have like these big HEX stakes, and then somebody hacks their wallet, liquidates their stake, or somebody hacks their wallet and liquidates all of the crypto in their wallet immediately. And there's no way that you don't know that you're hacked until the money is leaving, and now it's already gone. there are security measures you could take, like rate limiting wallets and stuff, so that even if someone did hack you, you have like two separate modules within your wallet. You have like your available funds, which are, you don't expect to need 100% of your bag 100% of the time. And so the money that's in that module is rate limited, so that even if somebody somehow stole access to your crypto, they could only sell X number of a percent every hour or every 24 hours. And so that would give you the notice of like, whoa, hey, somebody stole a little bit from me. I need to go and do a hard wallet recovery and then move my crypto into a new secure location. Like those would be things that would be really beneficial, especially to Hexicans who have so much literally at stake, you know, no pun intended, for the time durations that we're looking at, 5555. It would be really cool to have increased security. Yeah, it would
be secure.
Yeah, it's like, it would be nice to have some security that prevents you from getting wrecked while you're waiting that substantial amount of time for your stake to come due.
I'm not sure if that could be through the wallet though, because I mean, it seems like that would be more of a protocol deal with Hex, because the wallet, let's say, you know, you did get hacked. What if the attacker just uses MetaMask that doesn't have those protections to end it? So I'd be curious if there's some you know, creative ways to do that. I have an engineering background, so like my mind's kind of turning on this a little bit right now. But no, it's certainly a good protection for Hexicans. I just wonder how we could do that. Would it need to be at the protocol layer, or would it need to be at the UI layer, or through a new wallet?
Right.
Definitely. Yeah, I think about it a lot. You know, if you do a 10, 15 year stake, that means you're responsible for not getting hacked for 10 or 15 years. So,
yep. Yeah, it's, you know, that can be daunting. Obviously, practice good OPSEC. If you don't know what that is, there's an individual in the community who hosts what he calls Security Saturdays. And so it's every Saturday at, I think, maybe like 2 p.m. Eastern time in the afternoon, kind of Eastern time. And his handle is the real John McCoy, or just John McCoy, I think.
Oh, yeah.
John McCoy.
Yeah.
He's extremely knowledgeable in security. So if you don't know what you're doing in security, go on Twitter and find him, or find me and I'll direct you to him. But he does a phenomenal job of blending the before time, the Web 2 world, and now Web 3, and he can help you understand things that you can do to avoid being that unfortunate story of getting your funds taken from you.
Man, you're gonna have to hook me up with that guy, because I've got a background in security and security engineering side. So
nice.
I'll be very interested to talk to him. And
you guys would have fun
for sure.
He's a great guy. He's been super helpful in the community and gives a lot of his time. You know that security is not as sexy as number go up conversations. So, but unfortunately,
I thought about doing a security AMA, and I'm like, is anyone going to show up? I don't know. I need more subs first. Because I would like to do that. I would like to tell people, answer questions, things like that, such as the other gentleman. But
it's a service that people need, man. It would help people get a lot more comfortable in crypto, and I think that's the biggest barrier to entry, is that it's intimidating.
Yeah. Definitely. Well, chat, let me know. Leave some comments and stuff too. Let me know if you want security AMA, and also check out the real John McCoy that Orca talked about. Apparently he's already doing one of those as well. So security's #1. Yay. We got one person interested. Yeah. All right.
Yeah. I'm like the worst person to listen to, a security dude. I'm such a crypto degen that I'm just like, I'll just like sarcastically give you the worst security advice ever, and it's not healthy. So that's why I lean on people like you and John to be like, hey, go talk to these people. They actually care. I don't. I want a degen hard, man.
You want a transaction to go through quick, okay?
Yeah. Right. The C phrase. I can't forget it because it's tattooed on my palm. Like.
Yeah, I don't go outside much. So that's cool. Don't worry about it. It's under my shirt. It's on my.
It's under my shirt. Exactly.
Hey, so bear market a little bit. I want to hit it I think this is an interesting thing that people are probably thinking about too. I'm thinking about it, so maybe other people are too. Terra Luna, Celsius, couple dominoes have fallen. Who's next, man? What else risky businesses you can think of that are out there? I'm not saying you got to call the next one right now on the show, but like what are some of these categories or things that kind of give you suspicion? Like, hey, I don't know if they're going to survive this bad macro environment.
Yeah, I think BlockFi sounds like they're probably next. I don't know if they're necessarily insolvent, or if they're just like actually having to restructure because of bad business. Like some businesses just don't make smart investments, but that doesn't mean that they're over levered or anything like that. But I would probably keep my eye on BlockFi. There's probably things like, I don't know, if I had to gun to my head, liquidity cascade could affect something like Aave. But I haven't really looked at their collateral or their vault, so I don't really know if they're actually on the chopping block or not. But I would just say, yeah, any protocol that tries to provide that counterparty simulation of leveraged opportunity or borrowing opportunity, people don't really understand or don't appreciate, maybe is the more appropriate term, the cost base. Like I said, you know, Bitfinex can go well under $1,000 Bitcoin and still be fine on their holdings. So people believe that they have some kind of metric that says, well, most people's expense is in this cost range. And so the idea that the market could fall to this unrealistically low price on Bitcoin or Ethereum, it just can't happen to me. So my funds are safe. In fact, this is the only safe place left. Look at how Celsius and Luna have gone down. So now I'm going harder and harder into this protocol. And they don't realize that there's predators out there who have way lower cost basis, and they can absolutely deploy their capital in a way that dumps their assets and you know, liquidates you or exposes you to liquidation. So all of those protocols are extremely high risk because it requires like a certain cognitive dissonance to believe that the market cares what your cost basis is. It doesn't, and this stuff can go to zero. It's highly volatile. So if you're gonna just assume that there's like things called support and resistance and that they're somehow protecting you because the market has this camaraderie and it all cooperates, that's just, you're foolish. You're gonna get licked.
Funds are not as safe as one might think.
Yeah, definitely.
Got a question here. Prediction when Mt. Gox will release the BTC, if ever?
It's a good question. I don't think we're in what, June, middle of June? It's almost my birthday.
Nice.
I don't see anything this year. Maybe, I think it'll have to like coincide with some of the framework that's being laid down for regulations. I'd have to research more. Maybe they've been more transparent, but the last time I checked, they thought about like springtime this year. Maybe they released some of the funds, or they were going to release some of the funds. I think that there's still a lot of question about like the custody of that Bitcoin, as well as how do you appropriately distribute that Bitcoin without creating like a cascading effect where the last person that gets their coins gets disproportionately worse value because of the fear that people are selling into the market on a massive event like that. And even if it's not the Gox coins that are selling, like if the rest of the market goes, oh, hey, a ton of supply just got freed up and we don't know what they're going to do, so let's take our bets off the table and basically drop the price so that if they do choose to come in and liquidate their positions, they're not getting nearly the purchasing power for it. So I think that there's probably still some conversations to be had about what the distribution looks like in order to make it fair and accessible for everybody without kind of playing like a cascading bank run.
Wouldn't it be something if they made the bottom? The coins got released, the bottom's in 11K, we just hit it, and then straight up from there.
Dude, if you can give me the Gox coins, call it like the UN, but like governments coming out and saying like proof of work is illegal, and then give me like another 75 basis point raise on interest rates from the Fed, you're talking like $3,000, $4,000 Bitcoin, and like that's not support, guys. That's not, the bottom isn't in yet. Like that's just, you're gonna just take a huge bath, and then you can start to begin to worry at that point.
Wow. That'd be something. Oh gosh, 3 or 4K Bitcoin. That seems like such a distant memory of, you know. Yep. I think people literally don't think it'll ever happen again. Like it's impossible, right? In most people's minds, they think, oh, that was a long time ago.
That's the kind of stuff that keeps me up at night. Is when everybody starts to have it figured out. That's when it's time. You got to reanalyze the playing field, because that just means that like the unexpected is about to happen. $4,000, $5,000 Bitcoin would not surprise me. Like 11K bottom makes sense on a lot of different levels, but hey, 15% inflation doesn't make a lot of sense, but here we are. And it's like, so anything can happen out there. And when you're talking about high risk and just the nature of volatility, like people think that there's a difference between $30,000 Bitcoin and 20,000 Bitcoins. There's not. Those numbers are the same number. $20,000 Bitcoin and $37,000 Bitcoin, that's the same number. And like, it just shows you that you're that late. When Richard talks about like you bought the top of the S curve, it's like that's what I mean by some of these people have such deep positions, they will never be able to service that liquidity in market sells. So they can make tons of money off of the fear aspect and the market manipulation aspect of pushing prices lower and lower and lower. And I don't think that people really appreciate that it doesn't take that much economic energy, that much coin to change the prices that much. So if you start to feel really comfortable, like everyone's finally getting on Richard's side now. They're like, yeah, 11K is obviously the ball. Okay, let's go lower. Let's however low we need to go until y'all stop thinking that you're right is the price that we got to go to.
Well, in 2017, it was, the phrase was, when your barista starts telling you to buy Bitcoin, that's the top.
The top is in, man. Yeah.
So that's like, let's say 95% down Bitcoin, if that's possible. What does that do to Ethereum? What does it do to HEX?
Yeah, I think because of the gas inefficiency of Ethereum truly had a chance to overtake Bitcoin, what they call the flippening. But the gas fees clearly created a risk profile for Ethereum that isn't sustainable the way that it was when the fees were, a penny, 2 pennies. And so because there isn't the clear cutaway fee efficient, high community density layer one solution out there, they're all kind of just treated as tech stocks. They're just seen as a portion of institutional portfolios that are heavy in risk. And so when the macro picture gets ugly, these institutions are just going to take safe money. Like when you're managing billions of dollars, you'll take 1% on your money all day. You don't need to try and expose yourself to 6 million X. Like that's just unnecessary. So I think until something like PulseChain, assuming that we can get the adoption,
6 million X, not necessary.
Yeah, it's like no, that's such pleb thinking that you need to do that much damage in the markets. It's like, tell me you're not a billionaire without telling me you're not a billionaire. And so that's where I see the market has kind of been just pigeonholed for now as this sort of like tech stock, high volatility market. And I think PulseChain has a chance. If we get the adoption, we could see some real decoupling from that narrative. But for now, the money that's already in the pot, they clearly are not looking at these things as a inflation hedge. They're not looking at it as a store of value hedge. They're not looking at it as digital gold. It's none of those things to them. It's simply a volatile opportunity to lick customers high and low, and they're going to play that game until they have a more profitable means of extracting that value.
Until it's regulated away, perhaps as well.
Could be, yeah.
They see it as that. I would just speculate. I think they also see it as, hey, this is the market, tons of volatility. We know how to use it to our advantage. Let's get in, make the dollars until, in the future, it'll be harder to do that. That's what they suspect as well. And they're just playing this bear market cycle up and down. And that's certainly what it looks like going through these crazy, crazy volatility times. It's not just the retail. I think last time retail, got hit pretty hard. This time, hey, where's the institutions? Where's Michael Saylor? Where's not Puerto Rico? Who bought not Costa Rica? What is it? Damn country?
El Salvador. Yeah, El Salvador.
Yeah, they're all down.
They're underwater.
Where's the support? Where's
right,
the support?
And that's the thing is like, dude, when you're talking cost basis I know people that have cost basis under $10 in Bitcoin. So, do you think they care? Do you think that $20,000 is a bad day for them, or 11K bottom? Like, dude, they're bajillionaires at 11K. They can't sell that Bitcoin. There's too much of it, so they provide liquidity. But people like Saylor that buy in the tens of thousands, dude, you can throw hundreds of millions of dollars at those price ranges, and you're just wasting your money. Like, you're just not competing with OG coiners. Richard is laughing all the way to the bank when he sees a guy lever up for $250 million using diluted shares from his, securities offerings and dumping on his customers' heads to go out and buy the top of an S curve. It's like Richard was mining 50 BTC blocks, and assuming that he held on to even a 3% of what he was mining, he could lick Saylor. He could just market sell $40 million of Bitcoin and just wreck Saylor overnight. So like, it's a weird world where these countries and these people with a lot of money, like, don't ever confuse Michael Saylor's ability to get $1 billion from a bunch of idiots as the same thing as financial institutions that have ruled the world for decades and centuries in some cases, having so much capital that they can like take on these huge price dips and still make it profitable. Saylor, my dad put it best probably, talking about like, if you pick a fight with the US government, just understand that enemy has virtually unlimited time and virtually unlimited resources. So like, if you think that you're going to beat BlackRock at investing and you don't understand that they are like a direct funnel for the Fed's balance sheet, you just don't understand the enemy at the gate, and you're gonna do really poorly. Having a ton of money like Saylor does not make you smart. Those are two different things. So he's an idiot. Unfortunately, El Salvador, like a hope and a dream. It's like 3 yards in a cloud of dust was their approach. Like, we're just gonna buy it and back our bonds, and what could go wrong? It's like, well, what could go wrong is 4K Bitcoin doesn't sound that bad. It's like you're at like 30K Bitcoin, so have fun.
Yeah. Well, I'm hoping they'll hang on to it and not sell underwater unless they really want to make the bottom, huh?
Yeah, it'll be interesting to see. They don't really have a better like for assuming like that we know what they know, because they're going in on Bitcoin and not like Ethereum or some other cryptos, or like a basket of cryptos at least. They don't have a better alternative. Their fiat isn't worth anything, and they're going to get crushed in the distributive properties of inflation from the central banking institution anyway. So it's like, well, do we want to die at the hands of the Fed, or do we want to die at the hands of our own efforts to try and get out of this hole? You're dying either way, man.
It'd be funny if they got like this big ATM deal where they're like, if you do this, we'll just free ATMs all over the country. They're like, well, what we got to lose? Let's do it. Yeah.
Mm-hmm. Yeah.
I'll say hi to the chat real quick. Jerry apparently got here late, had a phone call, a very busy day for Jerry. Should have started over, finished catch beginning after. And then
I would just say hang out with us, man. Just hang out, and there's only so much info that you missed, but catch us. We're not building on anything. Like, these aren't building blocks necessarily, just chatting about a bunch of stuff. And then go and rewatch what you missed.
Exactly, Jerry. You got your answer from Orca himself. I know, Jerry. He's trolling a little bit, but
sure.
Yeah, always appreciate it, man. Jerry's lost in wormhole. Jerry could be lost in wormhole. We're not sure. They may have internet in wormholes. Nobody knows, right? It's like
right.
I love the analogy. Russell's teapot, I think it is. How can you prove there's a teapot floating in space? Well, nobody knows because nobody can go out there and see it or not. So you can never prove it. They apply it to religion and all these different things.
Yeah.
Series, we don't know if there's not internet in wormhole. Could be.
The Event Horizon has good bandwidth.
You could convince them, yeah.
Nice.
Yeah.
Happy to have you,
Verizon in a wormhole.
Right.
By the way, Verizon in a wormhole. Have you tried it? Please pay us.
Can you hear me now? Yeah.
Yeah, I'm not sure they can keep up.
You missed everything, Jerry. Pulse launched, HEX hit $2,000. We all sold. You're the last holder. Brutal, dude. Alan throwing haymakers, man.
It's after launch, there's always a dip, Jerry. You're going to get the dip,
yeah.
Though. So
you're going to buy that $20,000 Bitcoin HEX dip. We're all going to be laughing.
$20,000 Pulse. Oh my God.
Right.
No, I think the world might end if that happens. That'd be insane. Speaking of PulseChain, I want to ask you too. Pros and cons launching in a bear market. Is it going to launch in a bear market? what's the case for and the case against it? Like how do you think it plays out?
So the case for it is that's a super cool story. Like if we're talking about timing the bear market, as far as launching a bear market, I don't think we have enough data. Crypto is not old enough for us to know if that's a true consistent value proposition that launching in a bear market creates like a better way to go up. That's a cool convenience narrative, but this is not your ordinary bear market. You've got quantitative tightening for the first time in decades, a strengthening dollar. So it's like a rare situation where the markets are down, the value of the dollar is up, but the inflation of commodities is outpacing the strengthening of the dollar. So you've really got like the worst spread of variables on the table. So launching in a bear market could be beneficial in the sense that you're not competing with overinflated valuations. So anybody who is deploying capital is doing so in a more sobered, conservative reality where they can say, we're not just taking million X Bitcoin profit and then throwing it into a lower market cap or like lower liquidity order book and just trying to play the pumpamentals on that. We're at a much more relatively more conservative valuation landscape. So that could be good for people to have a easier time measuring the true confidence within the demand side of the market. As for, the other side of the coin is, what if you launched in the bull market, and what if it was a 7-year bull market? Is anybody going to be upset that you launched in a time where free money is falling off trees and everything is becoming overvalued? Like, so that argument, I don't think we have enough data to actually, those are convenience narratives and recency bias more than anything. As for like, is Richard timing the market? No, he's been transparent about the work that they're doing on the code side of PulseChain. And there's like this weird gaslighting trick that people do where you and I both know that PulseChain hasn't launched yet. We both know that neither of us know when it's going to launch. And so I can arbitrarily pick an event and correlate the significance of two unrelated phenomena, like a launch of a chain and the bottom of a bear market, and say he's waiting for these two things to be the same thing. And how it's Russell's teapot. How can you disprove it? We aren't there yet, and it hasn't launched yet. So the thesis is still intact, even though it's probably no more accurate than if we just closed our eyes and said it's not going to launch until the teapot starts spilling. So there's a lot of like clout to be gained by having contrarian views and having these, oh, hey, he's got this masterful plan that if it were that easy, man, I try to humble people's perspective of Richard sometimes. He got the top right, sort of. He missed it by several months and by several $1,000s on Bitcoin. To him, it's nothing because his cost basis, he knows that the difference between 65 and 69 is 0. There's no difference in that number. Yeah. But again, there's the time horizon. So think of how many people got liquidated going long when we didn't fall 85% overnight out of the parabola. And then people said, this time it's different. Oh, there's all this extra money in the world. So maybe 35K is really the bottom. And they keep pumping the leverage out there. And so these exchanges keep extracting value in the form of funding rates and liquidations and things of that nature. So when people start to, they say the more things change, the more they seem to stay the same. People really just want to believe that there is this predetermined path to the world. And so what really matters is catching the bottom of the bear market to launch. It's not true, man. That sounds cool. I do know what you mean. Like, that sounds cool. It's just not the truth, though. There are so many more variables in play than whatever you think this bottom of. Are you talking about the bottom of the real estate market? Are you talking about the bottom of the equities market? Are you talking about the bottom of the commodities market? Are you talking about the bottom of the bond market? These are all different things. What is the bottom?
If you had the launch button in front of you, big red button says launch PulseChain, would you press it now, or would you press it
as soon as it's ready? As soon as the code is ready is when I launch it. Because
let's say in 6 months we go into bull. I mean, that's probably not gonna happen. I'm just saying hypothetically, 6 months we hit bull market. would you press it then? Like where, I mean,
I'm not pressing it until the code is ready. Unless the code is ready, I don't care. And there's so much value being every single day that PulseChain hasn't launched is money that all of us, including Richard, significantly more than any of us, could be making.
Yeah.
There's no benefit to not having it on the market. Oh, it's a bear market. Who cares, dude? I can make money on price go down. I can make money servicing liquidity in low cost environments. There is money to be made in all markets. Nobody benefits, especially the founder, from playing this weird psyop where bear market means that prices can't go up. You guys do realize that Bitcoin in this bear market, while rates were rising, Bitcoin we were already at 20K a couple of months ago. And we went all the way back to 40K. That's a 2X, you guys, on the heaviest crypto asset in the entire market. What are you talking about? 40K and 20K are the exact same number in true OG Bitcoin cost terms. So like being in a bear market doesn't mean that money can't be made on speculative investments. The path to prosperity looks different. Maybe you're not going to onboard as many moon boys that only play the long side of the market. But guess what, y'all? No one cares about your $1,000. They don't. We're talking millions and billions out here. Like these numbers are real and they're much more impactful than, well, you know, we'll get a 10,000x if we launch at the bottom of a bear market. There's no proof of that. You're going to get a 10,000x if there's more demand than there is selling. That's how you get there. The only variable.
I want to ask on that point too. Are there other industries, you know, for example, IPOs and other types of markets where they do time it, you know, in a bull or bear market or otherwise? Like, is it relevant there, or is it, you know, when they're still physically ready?
No, they don't know. Time in the market beats timing the market, right? And they don't just say that because it sounds good. They say it because it's true. The market is unpredictable. What if we launch at the bottom of the bear market and then 6 days later, a nuclear reactor in Ukraine melts down? Did we hit the bottom? What is the bottom? When is it the bottom? Is it 12 years after the bottom that we look back and we say that was the bottom? The bottom is a made up figure, you guys. So you got to just keep in mind that if everybody knew what the bottom was, then we wouldn't have Freddie Mays getting wrecked. We wouldn't have the Barings Bank, which for 150 years controlled the shaping of humanity, get liquidated by a 28-year-old at a margin trading desk who was making unguarded bets against foreign exchanges. Like, if everybody knew this magical bottom and top, you wouldn't have the volatility. So it's a made up concept and people fall for it because it sounds good. It's the idea of like David versus Goliath and everybody wants to be David. And the reality is it's just a bunch of sweaty dudes rubbing nips on each other. Like, it's not that sophisticated. It's not that knowable. So
fun to talk about, but yeah. Only thing is certain is someone will market sell on Pulse. I think you're right, Alan. I think you're right. That seems very, very likely. I don't know. I mean, but what if, you know, I mean, I think there's some strategies there. Nobody, you know, it's a little taboo to say, you know, sell your HEX before it goes down more, or sell your Pulse when it's high, when it launches, so you can buy it back later cheaper. But hey, people are there. You know, there's a lot of different strategies you use out there, and it's not popular to say, but hey, there's some strategies in doing some of that stuff, even though they sound a little ugly. You know?
Right. That's people who, first of all, get your hands out of my bags, right? So stop telling people like, hey, you shouldn't be selling, or that guy's stupid. Like, you don't know their condition. You don't know that person isn't the wealthiest person in the ecosystem.
What if they're losing their house and they got to sell? You know? Yeah,
there's a ton of different reasons that anybody would sell, and very rarely is it because they're just dumb. Like, there are more dumb people than there are hyper successful traders. But when you're talking about why people are doing these things, they're not just waking up and going, what's the fastest way that I can lose $1 million today? Like, they don't wake up with those intentions. So they're trying to do the best they can. And what you think is a bad strategy for them was a necessary allocation of funds, or, you know, sell. So people need to keep in mind that there's way too much nuance. There's way too much uncertainty. Uncertainty is what creates volatility. Volatility is the price you pay for mad gains. That's the equation. It'll never change until you have quantum computers that are able to, you know, create a dystopian nightmare economy where we're like unable to overcome the financial weight of computers that hire and fire us. It's just not a thing that you should be worried about. Launching in a bear market, launching in a bull market, these are just narratives to pass the time. But ultimately, we don't have enough data to suggest that crypto is in any way incapable of decoupling from legacy. We saw it for a little while when Ethereum gas fees were low. It looked like that was the future. And then congestion occurred. Okay, so maybe PulseChain allows us to decouple. And then a few months into the game, there's a food shortage somewhere on Earth, and it's flour, wheat, something like that, something fundamental to the way that we get our food sources. So the world is a big place. Chain reactions can happen even when you think that you see all of the variables. There is no promise that they will play out exactly the way that the tea leaves appear to read. And that's why dollar cost averaging is such a successful strategy for people generation after generation, is because if you can just get out of this mindset that there are these defined parameters that the market owes you bottoms and it owes you tops based on logic that you drew on a chart, or because you have friends in the banking sector that can tell you that mortgage rates are going to go up. Like, there's a lot of variables. It looks easy right now to call the bear market because almost every major historical indicator of recession and of market collapse is in play. And so price go down is a pretty logical bet. Doesn't mean it has to. Every now and then the stock market does have a 600, 700 point bounce. Why is that? Tons of reasons. There's tons of nuance. So we got to get out of this mentality that it's all black and white.
That's why we like to stake and not to trade. Don't have to worry about any of that stuff. And,
yeah, staking is essentially
anyways.
dollar cost averaging, right? It's just a simulated dollar cost averaging that protects you from selling your bag. And there's a lot of people that would have done a lot better in Bitcoin if they had that opportunity, and a lot of them got goxed. So
got goxed. I get so many different memes for that one. Yeah. Definitely. And I want to ask you, and I know we've been going for a while. I know you're probably tired. You did a stream today, then apparently you ran a bunch of errands, and now I'm wearing you out. So I want
You're good, man.
I want to get at least one more question too that I think maybe you'll have some nuance and understanding for. What are some ways you can spot scams in crypto? There's how do you identify things that, and on the flip side, how do you look at things like HEX and understand why it's not a scam? PulseChain, stuff like this. Like, even though it uses, market, Richard said, using marketing tactics of scams to promote, but it's actually, a good product. How do you spot scams, and how do you tell the good ones that are not scams but may, appear to have some of this suspicious behavior?
Sure. So criteria set, that's actually something I intend to put on crypto curricula, is sort of like my general criteria set for evaluating projects. I think we understand that there's thousands of smart contracts that currently exist on the Ethereum virtual machine.
Yeah.
But you and I don't use thousands of financial tools every day, right? So it's important to know that when Richard talks about like product market fit, there's also the concept of like market saturation. So if everybody comes up with a new HEX or comes up with a new take on these things, it's diluting the value proposition of any of them. And that's where the networking effect or Metcalfe's law comes into play. And that's the brand that succeeds. So when you're trying to evaluate who is most likely to attract the community that can sustain the economic energy to incentivize increased prices in fee efficient liquidity pools, there are some criteria that make sense anecdotally. There are some criteria that make sense what I would call fundamentally. And then there will always be a healthy dose of uncertainty. You're in a super volatile market. It might be the best in all of these criteria and still just not have the critical mass of economic support to produce a sustained value proposition into the future from a speculative price standpoint. Like, maybe the smart contract continues to do its job every day, but it doesn't mean the number is going to go up. And so some of the criteria that is common is, a public founder or dev team. Are they doxed? And that doesn't mean anything that they're doxed. The value there is the body of work. Do they have a body of work that shows that they haven't been adversaries to their investors? They haven't been predatory business leaders. If they have, people that have had successful business ventures in the past, we tend to look at the past as rhyming with the future. We suggest that they probably have a higher likelihood of success in the future, just because of how rare success in business is. More people fail than succeed. It's like baseball, right? 3 out of 10 and you're a Hall of Famer, but 2 out of 10 and no one remembers your name. So having a historical track record or a public track record of the leadership tends to be a valuable criteria. Understanding the counterparty risk associated with the contract. So are there quote unquote admin keys that can allow the rules of the game to be changed? Or is it a renounced contract? Like HEX is a smart contract, so it's immutable, right? There's no way to alter the deployed contract. And then people should try to increase their literacy on Etherscan or on block explorers, right? So there's like a different block explorer for every blockchain. And if you say
Bloxy is like the easy mode Etherscan if you want to look at different wallets and stuff like the transactions.
Yeah, those are useful tools. Drop that link for them in the chat. Those are useful tools. Yeah. Using tools like that can give you at least begin to give you an appreciation for the difference between what they're telling you is in the contract and what's really there. When SafeMoon, people are familiar with the brand SafeMoon, one of the fastest tokens to ever get to 1 million holders. Yeah, you've heard of it. That's probably why you have that job at McDonald's. So they came out and, sir. They came out and advertised from the beginning that they had this automatic liquidity pool locking mechanism. But if you went on the Block Explorer and you read the smart contract, you would see that there was no coded renounced liquidity pool. And then if you actually did on-chain analysis, you would see that the liquidity was being removed by somebody. And that somebody maybe didn't even obfuscate some of the previous wallets that maybe had like early mining allocation of the supply of the tokens. So it's like, hey guys, they're dumping on you. And it's those are the things where people, unfortunately, the complacency, right? It's a convenience and complacence. When someone just comes out and tells you that it's the best thing since sliced bread, it's way easier to just take that at face value and to trust them. And well-intentioned people they trust people, right? And that's unfortunate in this industry because there is a ton of money to be made from abusing the relationships of trust and reputation. And so being able to see that this person hasn't historically scammed people in the past, that's a big win, right? People don't tend to go from being highly successful, legitimate business people to becoming Ponzi schemers. It's not typically the flow of business. Looking at what people are telling you and then vetting it against the contract, you can go onto the Block Explorer, you can pull up the contract, hit Control F, and try to search for keywords that might be relevant to strategies called like exit scamming and stuff like that, and trying to get a feel for what does the code actually allow the people that engage with that code to do. And then on top of that, if you're ever looking at, let me just read a little bit more. I was given a 10% tax if I didn't want to the SafeMoon team and we're dumping on the dollar. Yeah, so there are on-chain analysis is probably outside. If you don't know yet what is a scam and what isn't a scam, you're probably not hip to on-chain analysis. So the website that RHMaximalist provided, like that can simplify that process for you some. But then on top of having doxed team, body of work to compare, looking at what they say versus what's written in the code, analyzing, is the community like tangible? Are these real human beings? Do any of them have a previous like reputation in crypto? You'll see all the time people on Twitter are buying followers, and then magically these accounts that were started a month or two ago that have hundreds of thousands of followers, and all they do is tweet out the same garbage that everyone else tweets out. Hey, do you think ADA's going to $10 next week? And there's, all these people replying. Then actually go and read the replies. Is it just the same kind of cookie cutter, like insert shill here? Team ticker. Yeah, I'm on this ticker. We love this ticker. same tickers, it's like people don't talk like that. People have real emotions and personalities behind their shilling when they're human. So if you can't seem to find the RHMaximalist and the Orca and them sitting down and talking and saying, here's my experience in the industry and here's my, reputation on the line supporting this thing, maybe they're manufacturing like a false ecosystem of support for something that doesn't actually exist. That would be something where, like, I've never gone into a SafeMoon Twitter space and been like, oh, these guys got the alpha. It's never happened. I've never learned anything from anybody in any of those rooms other than, oh, there's 700 suckers in here patting each other on the back. And I don't mean to be mean about it. It's just that they clearly don't know much about crypto and they're doing the best they can to go out and chase the shining light or the shiny object. And so that's a dangerous place to be in. If all of your information comes from an echo chamber, good luck.
Yeah, but the BitConnect guy, he got on stage and he yelled BitConnect. He was very convincing.
What's up? Yeah, man. That's the tough thing about it is, like, in legacy finance, you have so many regulations that are allegedly designed to protect consumers. So you're less inclined to believe that someone would be so bold, that somebody would just come out to your face and lie to you because you expect there to be repercussions. But unfortunately, the crypto space has not seen a lot of real pressure brought down by regulators in a way that does protect consumers. And we could argue whether or not we even want that stuff, or if we just need to all be more responsible individually. But that's where you're going to see people be a lot more bold with their promises in crypto than they would ever be with the SEC knocking on their front door.
For sure. Okay. How much support you guys get learning to transact on Etherscan? It could be that front ends go down the government pressure and people don't know what to do. Yeah. You want to take that one, Orca?
Sure. I think it is important to know how to read and write contracts on Etherscan. All that means for the people that don't know what we're talking about is the contract that you engage with when you go to a website like go.hex.com, that's a DApp or a front end that allows you to have this graphic user interface, commonly referred to as GUIs, where it's convenient, right? There's that word again, it's convenient. And it allows you to kind of see what you're doing without being familiar with the actual smart contract functions that are occurring on chain. And the quickest litmus test for whether or not you are blockchain literate, in my opinion, is when Richard says, not your keys, not your coins. Do you actually know what that means? People think that that means my keys are this physical thing that I own, that I'm holding, and my coins are in there. And it's not true. The coins are in the smart contract. Your keys are just a code that points at that smart contract and says, this allocation belongs to these private keys. But it's all on the blockchain. That MetaMask wallet isn't holding anything. Your hardware wallet isn't holding anything. All of that stuff is on
Celsius
the chain.
is holding it.
Celsius is holding it, right? So that's
they were holding it, weren't they?
Right. And now what are they holding? There's a lot of hot air. And that's where understanding that the blockchain is a self-contained ledger, and therefore all of the currency or all of the balance on that spreadsheet is contained on the chain, not in your hardware wallet. That's just a physical air gap to stop people from being able to manipulate your accessibility to your claim on the proportion of that smart contract that belongs to you. But in reality, it's all on the chain itself. And so becoming more familiar with Etherscan and watching a couple of YouTube videos and just monitoring, maybe take 15 minutes once a week and say, I'm going to go to the HEX smart contract or go to a contract that you don't own and compare it against HEX and say, what are the list of transactions saying? And then try to figure out, can I identify the wallet that's actually making the transactions versus the router that serviced the liquidity of that transaction versus what is this thing? Oh, it's the contract. What's the contract for HEX? You know, there's little pieces out there that as you become more familiar with that, it paints a clearer picture of what you're really doing. Now, in the case of like governments shutting down front ends. These are like super edge case horror story scenarios. At that point, we're going to start asking like, well, Infero, which is backed by legacy banks, are they going to go down? That's a node network. It's like the most convenient, largest deployed node network in MetaMask. So does anyone know how to change their node network that they're accessing the chain from? Do we have enough distribution of nodes to be able to reroute to a sustained ledger outside of that? So like those are edge cases that are good to talk about. They're definitely worth entertaining and raising the level of education so that you know how to pivot. But I wouldn't spend too much time worrying about like the government's going to tamp down on crypto and then we all have to go and access the blockchain. You're going to have to figure out where the nodes are as opposed to learning how to stake your HEX through Etherscan. The Etherscan is not going to be your problem. The problem is going to be, do you have enough nodes online that you know how to access to be able to keep the chain running?
Yeah. Or the mushroom cloud outside.
Yeah, that too. The freshwater thing that you got to find every 24 hours. Yeah.
I just want to say too, I'm working on, started today working on a blog about smart contracts and how to write them. So cool. That'll be something that hopefully be helpful to people a little bit later on as well on that point.
Definitely, man. Very cool.
What's up? Yeah.
Bitcoin.
Now it's Bitconnect.
Yeah, dude. Where
that's one of the best memes I've seen for a long time. Whoever made it, thank you. Bitcoin.
Yeah, dude. That stuff is so good.
I have an amazing question here. I have $11. What crypto should I buy?
Bitcoin. Buy Bitcoin. Just support the movement.
Support the movement.
You can't do anything with $11, man, unless you go through a centralized exchange. You probably can't even do $11 in a centralized exchange these days with all the transaction fees. But yeah, dude, go on like Venmo or PayPal or something and just buy $11 of Bitcoin just to stick it to the Fed.
I know why you didn't say buy Ethereum, because the Ethereum transaction costs more than that.
Right.
Yeah. $11, maybe with a couple more zeros, we'll have a better footing to get into crypto.
And that's the sad thing about it, man, is like when we talk about launching in a bear market and bull market, we just don't have the data because we're in this weird world where the cost to do business is significant, and that's going to paint a different picture if all of a sudden you introduce a variable where that's not in the equation. And you say, well, there's actually a fee efficient onboarding process, whatever that might look like. With PulseChain, though, we're looking at bridging in from Ethereum. Like that's not cheap. So there are people that have developed solutions to that, like the PulseChain Lightning Network. I think they call it like PulseLN. They're working on trying to allow people to take their Bitcoin, so you could get that $11 of Bitcoin right on Venmo or something, and then use the Lightning Network to essentially bridge into PulseChain, and that might be a fee efficient way to get on board. So
PulseChain and Venmo partnership. That's what I heard.
Yep.
Calling it here.
Right. That is some goddamn safe moon marketing, bro. That's the Dogecoin. Oh my God, Target is now accepting Dogecoin. It's like, oh my God, all these partnerships in crypto. Eric Wall said it best when he goes, like this claiming that there's a partnership between a legacy business and crypto is the most meaningless thing on a roadmap that you could possibly see, because they'll just use it for marketing and move on.
They're making waves, okay? MoneyGram and Ripple.
Just give them another 5 years, man. They're gonna change the world.
Good things.
No more Swift. Yeah, good things take time.
Well, no more Swift for that's an interesting joke in these times. No more Swift for certain places.
Right. Yeah. Unfortunately, there's some truth to that.
Yeah. Well, everyone, hey, somebody else going to close up? Do I need to close up? Who's closing up? Who's closing up tonight? I got to close up.
I love it, man. Dude, this is an awesome show, dude. That energy right there with the McDonald's memes and stuff, dude, that's what we need. There's a guy that I like to follow on Twitter, and he does some Twitter spaces and stuff, and somebody essentially like started writing an article acting like they had an interview together when she was really just taking his words from the Twitter space and then like appropriating it to her being to sit down and interview with them. Wow. And so he was like, I guess now I'm like, I've almost made it in crypto because people are faking interviews with me. And I was like, hey man, if you see anybody, selling this interview that I said that you were my guy, it's like, it's because I had just turned $1 million investment into Bitcoin into a career as a Costco checkout clerk. So just let me have my win, man. Like I have this interview locked on.
The new deep fakes are interview Twitter space montages. Okay.
Yeah,
interesting.
It's weird.
Amazing.
And yeah, dude. And hey, the jokes aren't really knocking on McDonald's and stuff. Like, don't get it twisted. Like, go get a job. Go get a job, man. Do anything in these markets to make money and get into crypto. It's way better than being a drain on the system. And it's going to give you skills that'll make you more effective in all the facets of your life. So it's not hitting on anybody that's got a job anymore.
Definitely not. No, I mean, obviously, I hope everyone knows it's a joke. You know, it's a bear market.
Yeah, it's just fun.
McDonald's and every other fast food restaurant and entry level jobs, to their credit, if you're going to make tell what they do good in the world. Well, first, cheap food, you can debate the quality, blah, 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 but hey, cheap food feeding people who don't have a lot of money. And two, entry level jobs, there's a lot of people that need them. They need, teenagers, people, early in their careers and otherwise, especially those people, they need jobs, people who can't get other jobs for whatever reason. This is a place of employment. It gives them a paycheck. It gives them, a sense of purpose and meaning to get out and, whatever the job is, hey, it's better than being on the streets and getting into trouble and stuff like that. So
that's true, man. That's why Saylor is such a big proponent of fixing the ice cream machines at night, is because he knows that if he can keep that job, he's got a chance to stay competitive in Bitcoin.
Oh, Saylor. Will he be okay? Last question. Will Michael Saylor come out of this bear market with brighter or dimmer laser eyes?
Dimmer for sure, man. It's so easy to conflate Michael Saylor's publicity for success. The dude is a con artist. So when we were talking about the criteria, what's a good project to invest in? This man has defrauded investors. So that's not you don't want that check mark on the resume. And so when everybody just assumes that he's able to, because he can get hundreds of millions of dollars cheaply financed.
Devil advocate, would the bull run would have started as quickly, went up as quickly, hit the new highs had we hadn't had people such as Mr. Saylor, Anthony Papiano, who runs the Best Business Show, stuff like that, getting on during the bear market and saying it's going to 100K, it's going to blah, blah, blah. Is there, I'm just taking the other side of it, for example.
Yeah, I think the overwhelming majority of the overvaluation in these speculative assets came from cheap money, just the Fed essentially printing cash out of thin air. And so it's the concept, right, of like when you make a portfolio allocation to your large growth or large cap growth stocks versus the OTCs, and maybe you have a tiny percentage in the OTCs because the volatility there is so exacerbated by the thinness of the order books. Crypto is the thin order book on the Wall Street market. So if people are going to go and value Tesla at $1,500 a share or whatever it is, that's the same kind of allure that Bitcoin and Ethereum and all these other cryptos are going to have, where people are just, they think that because the money is so cheap to get, that they are best served by finding the next shiny thing. And so you just get these self-fulfilling narratives of overheated markets where people believe price equals value, and it's just not true. And people don't have enough education or experience to understand the cost basis of the institutions and the whales that they're playing against. And so they fall into this hindsight victim mentality where they say, well, how was I supposed to know that Bitcoin could go back down to 5,000? Everyone told me that the hash rate protects it at this, made up metric. And it's like, what are you talking about, man? There's like 11 people on earth that know that this stuff exists, and like 10 of them are friends. So
I like it. Well, on Shiny Object Syndrome, hopefully PulseChain, that's one of the things I'm hoping for whenever it launches, it's going to have this vertical ecosystem to keep people more into hopefully projects that are legit on PulseChain, PX, stuff like that. And there's a lot of interesting community projects as well. I'm hoping that can dampen down, we need new stuff. HEX is old. HEX, this other, let me go look at, these other projects. No, there's plenty of nice projects. Hopefully, if everything goes well, there'll be plenty of shiny projects within the PulseChain ecosystem.
And focus on what you're really after, you guys. Are you after financial freedom? Then invest in financial products and not on like roadmaps to fixing the world. Like, support those things if you want to be philanthropic, and if you want to, like, that's stuff I care about. I don't need number go up all the time. Sometimes I want to give back and produce philanthropy. So there are thousands of options out there, thousands of shiny objects, very few useful financial products. The same reason that we have in Legacy, you've got a couple, we have a checking account and a savings account. We don't have 2,000 different types of bank accounts. There's just not that many different things that we need. So try to, if you're seeking financial prosperity, find the product market fit with sustained and proven body of work in the financial product aspect of crypto. And then if you want to have fun or experience a new culture or experience a movement of an ideology, have a portion of your bag for that. But don't think that just because something is new and that the white paper sounds cool, that somehow justifies it outperforming a financial product that is boring and serves one purpose very efficiently. Because bonds make sense for a reason. The equities market has made sense for a reason. Commodities make sense for a reason. Mortgages make sense for a reason. There are real financial tools that have purpose, and it might not be sexy, but it sure as hell beats trying to leapfrog from one project to the next, hoping that you're catching the short-term gains.
And catching some falling knives and everything else you don't want to catch along the way.
Got scars on these hands, baby. Never afraid to reach out for a falling knife.
For sure, man. Well, it's been great. Thank you, everyone, for joining us for the McDonald's episode, I guess. I appreciate
the value menu or whatever they call it.
Yeah, the valued package of Orca and I delivering the brand content and hopefully some nuggets. And I think we definitely got some nuggets. And Jim's, you get the nuggets joke? You got that? Yeah, the nuggets.
Yeah, that was good.
That was actually, I didn't mean to do that. That just came out. So yeah, all right. I better. I'm getting. I better quit while I'm ahead here.
A little delirious, yeah.
Oh God, Big Mac of the stream. Oh, I love it.
Nice, super size. Awesome.
You guys are great. Thank you, man. This is a great chat. I appreciate you coming on. I know it's been a while, but trying to get you on the show. It's I knew we'd have a great chat. I knew it'd go fantastic. So
for sure, man. I hope more people do your show, dude. You've got good questions. The energy is awesome. We need that kind of energy now more than ever. I don't want to get all depressed and sit around and cry all day. So I like that you had interesting things to talk about. I love getting to hang out with Hexicans, get to talk about crypto. This stuff is awesome. More people should come on and do the show so that I can not do them. But no, man, it's been a pleasure. I appreciate you having me on.
Of course. Yeah. Everyone out there, you heard it. Sub, share, do what you can. We're almost at 1K. That'd be a nice,
very cool
silver lining. Not that I try not to talk or care about that much stuff.
Clout chaser. He's a clout chaser.
Yeah. I think I need 10 times more to get in that next level category.
Yeah.
That kind of clout chasing. But anyways, okay. One more comment. Came for the beard, stayed for the hopium. There you have it. I don't know if we gave you much hopium. We talked about bear a lot, but yes, I'm glad it was positive at least.
Yeah.
All right, everyone. Take it easy. Orca and I, check them out on Twitter at crypto. I'll let you spell it.
Yeah, it's cryptocurricula, CURRICULA. Just kind of means like a broad educational platform for finance and crypto.
Yes, I'm definitely looking forward to that stuff coming up as well. Follow me, RHMaximalist just the way it sounds, RHMaximalist on Twitter. And until next time, have an amazing night and have yourself a double quarter pound of cheese if you like.
I'm loving it.
Got it. Nailed it, man. Nailed it. All right. Good night, everyone.
Peace, brother.